All right, everyone, I'm about to show you a house that Blackstone is selling on the US housing market. They're selling this house at a loss. It's a part of their liquidation down here in Florida. Blackstone is dumping houses at a loss here down in Florida. And I keep finding these houses, and I'm saying to myself, what's going on here? Why is Blackstone selling? And what does this mean for the future of home prices in Florida and the US housing market? So this is the house, everyone. It's a 3-bed, 2-bath, 1,300 square feet. Now, Blackstone bought this home through their company Home Partners of America in August 2022 for $365,000. When we look at the county tax records down here in Manatee County, we can confirm that the owner is SFR Residential 3, which is a Blackstone entity. And what they did after they bought this house, which is now for sale, is they tried to rent it. They tried to rent it at $2,700 a month. And you can see they weren't able to find a renter at $2,700 a month. So they then cut the rent all the way down to $2,100 a month. And they still couldn't find a renter. And that's when they made the decision to sell. And currently that house is now listed for $350,000. So Blackstone is currently taking a $15,000 loss from what they bought it for. Now, you guys might remember about a month ago, I did another video on Blackstone selling a house in St. Petersburg. It was a similar situation. They bought 2 years ago at the peak, couldn't rent it, they're taking a loss. This is another example. And I've talked to some realtors down here who say that Blackstone's selling lots of homes, as much as 30 to 40 in different counties at a given time. And I'm concerned by this development, everyone, because I'm saying to myself, what does Blackstone know about the future of the housing market here? Why are they trying to get out? And just how much could home prices go down in a neighborhood like this when the institutional investors start to sell? Well, data on Reventure app shows that home values in this area here in Palmetto, Florida are anywhere from 30 to 50% overvalued depending on the zip code. So there's lots of downside. And I think Blackstone knows that. There's lots of downside in the market, and they also see that the inventory has increased. So now we have the highest level of homes for sale in at least 7 years. So very clearly this market's on the decline. And if you're a buyer or investor out there, I'm going to kind of tell you how to take advantage of this. The investors who bought at the peak who are selling, they're taking the loss, but their loss is your gain. If you've been patient out there, holding capital, holding cash, there's going to be a lot of buying opportunities in Florida over the next 1 to 2 years, because it's not just the institutional investors that are going to be forced to sell, it's also the amateur investors, everyone. Because the math on real estate ownership in Florida from an investment standpoint no longer makes sense, because the rents are dropping. In many cases, these investors are cutting the rents as much as 20%, while the property taxes and insurance are increasing. And so maybe when Blackstone bought that house, they thought they would make $2,700 a month in rent, which is around $32,000 a year, backing out expenses. Maybe they'd be making 18 grand a year in net income. Well, now that net income is closer to 10 grand, not nearly enough to justify owning that property, especially after you take into account debt. Because this is the other thing that's really scary, is many of these corporate landlords bought these properties using debt. And the way it works is they don't actually take out a traditional mortgage at acquisition, but rather they take out a big credit facility, warehouse line, or mortgage-backed security for hundreds of millions of dollars, and then take that hundreds of millions of dollars and buy houses. And what happened was these investors in 2018, 2019, 2020, and 2021 took out a lot of these credit facilities when interest rates were really low. And many of these credit facilities have 5-year terms. And so what we're going to start to see over the next year is many of these corporate investors hit a maturity wall where they're going to have to refinance their debt at higher interest rates. Maybe they took out their debt originally at a 3.5% rate or a 3% rate. Now they're going to need to refi it into a 6% rate, depending on how much the Fed cuts. And that's going to decrease the profitability on these rentals even further. Now, what's amazing, actually, folks, is how much the values are going down already on certain listings in Florida. You know, the corporate investors are trying to front run the downturn and get out before it gets bad, but it's already getting bad for certain owners. I was just 5 miles down the road here in Palmetto. I filmed a short actually in front of this house where it's an individual selling at a $35,000 loss from what they bought it for 2 years ago. They bought it for $335,000. It's currently listed for $299,000. So you have individuals losing that type of money already on the Florida housing market. Down in St. Petersburg on the west side in a city called Seminole. My friend just sent me a listing where the owner took a 24% haircut from asking price to sell it. Went down from something like 520,000 to 400,000. You can see Zillow is showing that the value is down 24% in the last 30 days. And so certain sellers are getting desperate, which is why if you are an opportunistic buyer and investor, you should be active in this market right now. And the way I would encourage you to be active in this market is to not even think about what the list price is. Think about what you would be willing to pay for an investment property or a house, and start making offers at that price. Even if it's 25% below asking or 30% below asking, we are starting to see certain listings transact at those type of discounts. Now, to be clear, I'm not saying it's a good time to buy. I'm not saying that the crash is over. I'm simply saying we're moving in the direction here in Florida where certain listings are having the type of price cuts that are actually going to get you excited. Like in St. Petersburg, there's a condo near where I live where sellers are cutting the price 40% over the last 2 years. There's a big HOA assessment. So I'm just seeing more and more, anecdotally, just being on the ground, I'm just seeing more and more of these examples. Now, if you look at the aggregate data, like you go on Reventure app, you'll find that home prices in Florida are only down a couple percent, according to the sources that I use on Reventure app, including Zillow and Realtor.com. And that's because there's a lag between when listings get into the sale comps and then filter through to the value metrics versus like what you're seeing live on the ground. So from what I'm seeing on the ground, I feel pretty confident in saying values in Florida are going to go down and go down by a lot the next 6 months. The Reventure app home price forecast score confirms that. And later in this video, I'm going to actually tell you how to use Reventure app to identify the zip codes where you're most likely to get a house at a big discount. But first, I want to talk about the economy, everyone, because a lot of the recent economic news is showing up and is not very good. We keep hearing job reports figures coming out that say the economy is slowing, the labor market is slowing. And this is a big concern because we're seeing the unemployment rate go up, we're seeing the job openings go down, we're seeing the private payroll growth go down, and just like we're seeing 4 to 5 different sources now, whether it's the BLS, ADP, the Challenger Job Growth Survey, these are all kind of starting to say the same thing about the labor market, that it's heading down. And so what you got to think about is, what does a declining labor market mean for housing, right? So the unemployment rate today is 4.3%. What does the housing market look like if the unemployment rate is 7.3% or 8%? We have to start baking that into our expectations and projections of where things are heading, because I'm seriously concerned that as the calendar turns to 2025 at the end of the year, that we're going to see a big spike in layoffs. And we're going to see a lot of people who can't afford to pay their rent or their mortgage. And we're going to see a lot of even more investors that sell out of the market. And so that's why a defensive posture as a real estate investor or home buyer is extremely important right now. If I go to Reventure app and we look at the cities with the most overvaluation down here in the south, these are the ones with the most downside risk. The higher the overvaluation means that the more that home prices disconnected from local incomes. And so you throw a recession into an overvalued housing market, you can get a big crash. And no doubt the areas in red that are most overvalued are in the Sun Belt, states like Florida, Texas, Tennessee, Arizona, Colorado, and Utah. Now, on the flip, the areas in America that are least overvalued, where prices are most supported by local incomes and fundamentals, are in the Midwest and Northeast. A state like Illinois is only 5% overvalued right now. A state like New York is only 11 or 12% overvalued. So I'm not expecting a major crash in Illinois or a major crash in New York, especially with the inventory levels in those states so low. In particular, a state like New Jersey just has no inventory on the market right now. The number of homes for sale here on Reventure app, you could see we're at the lowest level in close to a decade in New Jersey. Almost no recovery. No recovery is taking place in listings, meaning it's still a hot housing market. So if you're a buyer in New Jersey, you can let me know in the comments below. You're still probably seeing bidding wars. Same goes for Massachusetts. And so this bifurcated housing market continues in 2024, where the downturn is playing out in the South, but the Northeast and Midwest prices are still going up. But more broadly, everyone, buyer demand continues to drop on a national basis. Mortgage applications to buy a house are down around 4 to 5% year over year. They're scraping at the lowest level since the 1990s. Redfin just came out with a report saying that pending home sales are down 8% year over year, and that they continue to drop even though that mortgage payments are dropping. So lower mortgage rates is not drawing buyers back into the market, and that's because buyers care about the price, not the mortgage rate. That's something that sellers on the US housing market are beginning to learn, and they're going to have to continue to learn, is that this narrative about Fed rate cuts and mortgage rates dictating the market is a false one. Rather, mortgage rates have an incremental impact on buyer demand, while the real thing that is turning buyers off right now is sky-high prices. Inflation-adjusted home prices are still at an all-time high level. So even I think when some of you see these price cuts I show you in Florida, you say to yourself, I don't care, because it's still too expensive. That Blackstone house, it's selling for $351,000. Maybe it should be more like $250,000 based on the local incomes in this area, based on what they can rent it out for. And I would encourage you folks to just pay attention to the rents in your market. Even if you're not looking to rent, watch what the rentals are doing. Because if you're seeing big cuts on the rentals, that's telling you a lot about where the future direction of home prices is going in the market. Because ultimately, home prices are a function of two things: incomes and rents. Incomes determine how much a regular buyer can afford to pay. Rents determine how much an investor will pay. And so if we're seeing declining rents, which we're seeing in much of Florida right now, that's an ominous sign about where home prices are heading in the future. The more that rents drop or just stagnate while expenses go up, the more that investors are going to be pressured to sell, the more that second and third homeowners are going to be pressured to sell. Because I want to show you folks what's happening here with these investors in Florida and with these renters in Florida. I just drove about 5 miles from the house I was just showing you that Blackstone was selling to another house down here in Palmetto. And I want you to take a look at this sign in the front of the house. It says, all evicted, no trespassing, cameras inside. Basically, the landlord here is announcing that they evicted the tenants. I just talked to the neighbor. The neighbor was saying they evicted the tenants kept coming back. So they had to post these signs saying, don't come back, you've all been evicted. And this is an unfortunate thing that's going on right now in the Florida housing market, is we have lots of evictions. We have lots of situations where the landlords increase the rent over the last 3 years to a level that the locals cannot afford. In this zip code here, the rent to income ratio is now over 35%. Tenants are paying over 35% of their gross income on rent. And some of the zip codes to the south in Bradenton, the rent to income ratio is over 40%. So imagine that, households having to pay 40% of their gross income on rent. And that worked for a little while during the pandemic, 2021, 2022, when there was the big boom down here. But now this area is kind of slowing down, hitting a bit of an economic downturn, and the rents are dropping, and there's a big surge in evictions. And it's a big problem for these real estate investors because they bit off more than they could chew. A lot of the investors came down here to Florida during the pandemic, and they bought a narrative. They bought a narrative that this area was just going to keep booming forever. And in some of these zip codes, everyone, investors bought 40% of the homes. And so now you got to ask yourself the question, what happens on the down cycle of that? What happens now that the rents are dropping, the evictions are up, the property taxes, insurance are up, and now we have many of these investors forced to sell, including Blackstone? It paints the picture that there's a lot of downside here in the Florida housing market that you need to be careful of and that you need to track in 2024 and 2025 before you make your purchase. Yes, prices are going down. Yes, you can maybe get some good deals if you do lowball offers, but you're going to want to understand just how much risk there is in your market. So to do that, head to www.reventure.app and pay special attention to 3 data points. Number 1 is the overvaluation rate, how overvalued home prices are in your area. Number 2 is the home price forecast score. Next 12 months, are prices likely to go up or down? And number 3, pay attention to the rent to income ratio, especially if you're an investor. You're going to want to potentially steer clear of areas where the rent to income ratio is close to 40% because it signals a renter population that's extremely stressed on their ability to afford the rent, which signals investors who are stressed on their ability to afford the mortgage, taxes, and insurance.